Okay, so we're at about 9:01. I see there's still a few folks joining in, which is normal. So we're going to go ahead and get started. Um, Thank you all for joining us today. This is, again, the Royalty Exchange Investor Office Hours live Q&A webinar, basically. So what we do on these calls is basically answer all the questions that any investor may have, both new and existing. My name is Anthony Bruno. I'm the Director of Communications. I'm joined today by Rob Bernard, our Chief Counsel, and Ryan O'Connor, our Chief Financial Analyst. We will be happy to answer all of your questions. Basically, a few bits of housekeeping on how this works. On your webinar screen here at the bottom, you're going to see a Q&A feature. If you could use that to type in your questions, that's the best way to leave a question. You leave them at any time, right? As we're talking, if you have a question about what we're addressing at the moment, etc., just type in your questions there. We will answer all of them as we go through the process. I'll answer them in various orders depending on what the topic is at the time. We also have a number of questions that were left in advance by some of you who left some questions upon registration. We typically address those first, and then we'll address the Q&As as they come in overall. So please, any question at all whatsoever, we're happy to answer them. That's what we're here for. Basically, we're going to start off with a couple of small things, though. Sometimes we start off with a bigger presentation, a bigger idea. Today, we're going to kind of focus on a couple of new mostly housekeeping kind of items related to investors that you guys might find helpful. So the first one I'm going to bring up is you may have seen some emails lately about some listings that are on the marketplace that are new, but they're not auctions, right? We're saying, hey, here's this listing, here's some details about how it's earned, et cetera, and you go to it and it's not an auction, but it's just rather, it looks like a secondary market listing. So what that is basically is that we've begun allowing or adding the capability rather for sellers, artists that would normally list their catalogs on the auction house. We've added the ability for them to add them directly to the secondary market. So basically it would be like bidding on in a listing that's in the secondary market that another investor owns, except in this case it's owned by the original seller. There's really not much difference in terms of how you're evaluating the asset. It's just a different type of seller in this instance, basically. So those are called direct listings. You're going to be seeing more of those. We're just slowly starting to roll it out, and so far it's been very popular. So anyway, those are direct listings. If you have any questions about those, we'll be happy to answer them. Two other small items that we've added recently is both mostly related to the secondary market. One is if you are an investor that has already bought an asset on Royalty Exchange and you have those assets listed in the secondary market, previously and still today, you've been getting an email whenever someone's placed an offer on those assets. What we've added just in the last week is the ability to opt to receive those alerts via SMS text messaging instead, or as well. And so basically the way that's going to happen is that you'll receive an email the next time you get an offer on your asset, and in the email there'll be a link to say, hey, if you'd rather receive these notifications via SMS, just click here, and that'll lead you to the form you need to fill out in order to get them via SMS. If you don't want to wait, you can just go into your investor profile, and there's a settings tab there that should allow you to change to SMS notifications as well. If you have any questions about that, as always, just email investors@royaltyexchange.com. We'd be more than happy to work out for you. But we're hoping to add a little bit more SMS messaging to kind of tone down maybe the number of emails that you might be getting. Two more items on that note. One is there is an option now. If you register for an auction, you get an email whenever there's any kind of bidding activity, new bid, new bid, new bid. That can be a lot. And so one of the options we also have now is to instead of getting every single bid increment email, you can opt to just receive a summary for each day. Today, here's the bidding activity for this particular auction that you're registered for. That again can cut down on the number of emails that we're sending out to you and hopefully be a little less intrusive. But if you prefer to see them for each increment as they happen, that's still an option as well. So it's really up to you. So that's another one. And then finally, we've updated our overall email preferences such that you can be a little bit more distinct in terms of which emails you want to get in terms of regular communication for us. For instance, one is whenever there's new auctions, we tend to put out an email saying, hey, new auction, new listing, etc. And you can either you could opt to get those for right as it happens. So right when we announce that auction, you can get the email. Or if you'd rather, again, get more summaries, you can sign up for the marketplace update email, which basically just sends you an email every Tuesday which says, okay, here's what's happened in the marketplace. Here's what's currently live right now. And that allows you to get more of a summary of activity as opposed to every single distinct activity. Again, completely up to you. So those are the basic housekeeping items we have today. No big presentation of data or anything like that this month, but I think all of these things are useful. So with that, we're gonna jump into the questions that were left in advance. I see there's a couple of questions coming in via the Q&A, and we are gonna get to those. But first, we want to get into the questions in advance. So here we go. First question is, if we would like to view the historical data on earnings for a particular catalog beyond just the 3 years noted in the auctions and the time period noted for marketplace items, is that data available? And the answer is yes. There's in the financials tab on the auctions, and Ryan, you can tell me exactly where it is in the marketplace. There's a link for raw data, and that raw data is basically a spreadsheet of the entire historical earnings that we have. Brian, you want to explain anything further there, or is that pretty much the extent of it? You're on mute, my friend.
Sorry. Yeah, it's right there in the auction tab. We do take it down after the auction has been complete, just to prevent, just to keep the marketplace like an even playing field for all investors, whether you're an institution or a individual. We are working on a way to provide data after auctions have closed to everyone that would keep it an even playing field, so it doesn't matter the level of resources you have at hand, that everyone would have the same advantage.
Okay, there you go. But yes, the raw data tab, it's all there, and you can have you can look through that pretty much anytime. All right, so any examples for royalty investing in industries other than music? Yes, absolutely. In fact, there's one live right now. Currently, there's an auction live for residuals attached to a number of different movies, including the Star Trek movie franchise, or installments anyway of the Star Trek movie franchise. So we've done that. We recently had one close just a couple weeks ago on trademark royalties related to Cherry Garcia ice cream. And then we had one of our biggest auctions ever just last month, I believe, which was around another, I think it was trade secret royalties around Listerine, the Listerine mouthwash brand. So we do have several examples. They are outliers. They are not as common. Music is far more common, and that's why that's the majority of what you see and the majority of what we try to explain and do education around. But we absolutely do have examples outside of music. You guys have anything else to add there about that? About other types of?
No, you got it.
Yeah, there's plenty.
Yeah, I mean, there might be some different ways of having a review and evaluate those, but that wasn't the question. We can get to those if you guys have those questions, type them in. But basically, yes, they're there, but they're far fewer, they're far less common. So again, music royalties are more, several a week, and it makes it a lot easier. Any relevant data for a Canadian investor? Not sure too much on that one. Rob, you want to jump in on that?
Yeah, I don't know a lot of data, but I will just say that there's no restrictions on your ability to bid or buy a royalty asset through Royalty Exchange. If you're Canadian or any foreign country, you certainly just want to check with your tax advisor to make sure there's no issues on that end, or at least that you understand if there are any issues on how that works. So that's all I kind of say on that.
Okay, yeah. So yeah, no, as a Canadian investor, or in any country, basically, you're welcome to place a bid. Once you own it, obviously, you just got to comply with whatever the laws are in your individual country. The one thing I might say on Canada is that the Canadian PRO, SOCAN, we're not able to make those types of royalties available on the platforms because SOCAN does not allow for reassignments of royalty payments like they do in other places. So until that gets cleared up, there's not a whole lot we can do in terms of Canadian derived royalties, but in terms of a Canadian investor, there's really nothing there for us to have to worry about. All right, next question. This is a great question. Can you provide actual cash flow data for assets post-auction in total by dollar age and by genre in order to provide guidance for future acquisitions? Actual data from all 800 auctions in a grid, for instance, would be useful. It would be useful to know, for example, if 80% of auctions are experiencing a decline rate of X versus 20% are increasing and so on. So that's a great question. I'm gonna let Ryan jump into that in a second, but there's just, two quick things. One, we are literally just working on, and we also just in the last office hour session did talk a little bit about overall returns data, which we show it in an aggregated way. We kind of break it down by the type of asset in terms of 10-year term versus life of rights, whether you've acquired it from the secondary market versus the auction house, whether you acquired it via a manual offer or a standing offer. All those returns data is something that we've analyzed, broken down, and just recently sent to all of our all access investor members. All access members, there's a premium membership tier that you get these special, really in-depth reports, but components of those reports we do make available more generally and publicly. And so that returns data is actually on the website right now. If you have any questions, I can send it to where that is. But and we should definitely look a little bit more on the sort of the cash flows. I think that's an interesting twist to that I think we can do in aggregate. Providing an actual grid of all auctions is rather unlikely. I'll let Ryan explain a little bit more about that. And then also on the by genre part, that's actually a tough one, because many of the catalogs that you see available on Royalty Exchange are not necessarily just of one genre or another. So these are songwriters, right? So songwriters have maybe 100 songs in their catalog, and some of those songs might be country, some of those songs might be more pop, some of them might be something else. I mean, it's rare that they're too extreme in their divergence, but it's really difficult to look at one catalog and say, okay, that's just this genre. And so that can skew the data a little bit. So that's something we definitely want to take a look at, and we might be able to in time parse out the genre from the individual catalog asset itself. And that's something that we're kind of working on in sort of our databases. We're building, the history of these things, but that's the one question mark I have on that. Ryan, you want to jump in on the rest of this stuff in terms of cash flows? I mean, you're the guy that
yeah, it is a great question. And like you said on genre, I don't think genre matters as much as a lot of people think it does. It's more the dollar age, I think, is the key there. And then if you wanted to go a step lower, it'd be the source. Right? How's it performing by dollar age and by source? Because that'll really kind of tell you where it is in the life cycle of it. We do have a data analyst now that is collecting all of this and putting it all together. As Anthony can tell you, we have looked at it by source before, and we haven't even, the great part about this is that it's not just the auctions that we've done, but also just connected accounts to our system, right? So maybe an interested seller that actually didn't go through as connected account, well, we're able to pull all of that data as well. It's just a heavy lift kind of aggregating all of that and getting it into a workable format, and then also, testing that data to make sure there's minimal errors to no errors and that sort of thing. So it's certainly something we would work on and would love to provide to our investors. Just going to take a little bit to be able to actually kind of push that out to the investors in a usable format that we know there's no errors or anything in the data.
And when you say by format, just to clarify, you're talking about streaming versus radio versus whatever. Okay,
exactly.
That's also important to note. And I'm just curious on that. Now I'm curious about this, right?
Mm-hmm.
So even with that, Ryan, would those cash flows differ based on? I mean, we're talking about format from like streaming versus live versus radio, just in the public performance side. But would there be any difficulties, whether if it was like a sound recording royalty versus a public performance for royalty versus, say, a publishing like mechanical, for instance, royalty? Does that play into account in terms of any of the cash flow?
Yes.
Or aggregations?
Yeah, so we would definitely want to split it out as, you'd have your musical composition side and then your sound recording side, right? We'd want to keep those separate. The sound recording side would actually be probably a bit easier just due to the number of sources, at least in the US, are a lot smaller, right? You have your streaming, you have your downloads, you have your physical, and then pretty much, everything else is other, right? So
right,
it makes it a little bit easier.
And in terms of putting like everything up into a grid, that's kind of difficult as well, just because a lot of these are now assets that people have acquired, that they've bought. There are some privacy components to that, other types of considerations that would make it a little bit difficult to just throw it all up there in that sense. And so, transparency is kind of one of our core tenants here at Royalty Exchange. We want to be as transparent as is possible in it, and as is fair to all users. So it's something to kind of look at and think about. I'm just wondering if there's a way to do it. I know we're definitely going to take a look at this a little more closely and see where we are on the timeline for some of these things. But anything like that will definitely help, I think. So
yeah, and I think we'd have to at least start, if not kind of the farthest we could go, is just in an aggregate format.
Yes.
But that should give you more than enough, right? If you, for example, look at the 7-year dollar age for streaming, and then we would be able to show like, this is how the cash flows have performed over time, right? So you could see exactly how it's performed, and then you could even model out a catalog individually, right? Expecting like, hey, this is the aggregate of everything that we have. So.
Right, exactly. Okay, moving on then. How are the rights valued to determine the sale price? Well, that's kind of easy. The marketplace determines the sale price, right? I mean, we provide the information, we provide the historical earnings data. We provide some benchmark, analysis for those that are all access investor members and things like that. But basically, the marketplace decides whatever investors are willing and interested to pay for the asset is the thing that determines what the price should be. That's how open markets work, and that's how we've always operated.
Yeah. I mean, if you're wondering more about how the auctions are priced to start, we want to do those at a point where the seller is comfortable, but also at a level where it will entice our investors, that the rate of return will pull you in to do a little bit more diligence on the asset to see if it's something that you're actually interested in. That's kind of how the auction pricing works as well.
All right, great. Let's see here. Next question then. Ryan, this is probably gonna be for you as well, but let's get started with this one. I'm trying to understand how spending $180,000 for something with 12 months earnings of $30,000 would take 8+ years to get my investment back, and then I have to pay taxes before maybe making a profit. So, please help me understand this business a little bit better. So I think this person's just trying to understand how to invest, or what the investment rationale or thesis is behind something that might take 8 to 10 years to get my money back. And we get this question a lot, by the way, it takes 10 years to get my money back, that kind of thing. So, Ryan, why don't you just address maybe, first of all, the overall philosophy of the kind of investing that this sort of platform, I guess, attracts. And then you can talk a bit more about some of the more details in the investment return and such.
Yeah. So, I mean, this one's a bit more complicated, and it really depends on specifically kind of what asset we're looking at. But so in general, right, like the asset's a cash flow generating asset. So you're getting cash flows, every quarter, every half year, in most cases. So you have that income. So a lot of our investors just look for that consistent income that they'll be able to receive over time. We tend to have a lot of our investors holding on for a long time, right? So if you're holding on for 10, 20, 30 years, depending on the type of asset you bought, 30,000 a year is pretty decent, decent amount of money that you're receiving every year. I have to know the specific asset to understand a little bit more, right? If it's a life of rights assets, that example provided is actually, I would say, a really great deal. Again, it really depends on the specifics. How old is the catalog? Is it a 10-year term deal? Is it a life of rights deal? Right? On a life of rights, like I said, that's a pretty decent one. On a 10-year, it would really come down to those specific factors. Is it coming from streaming? Has it been growing? How old is it again? And kind of what is the return you're looking for? I believe that's about a 16 to 17% return that you would be receiving if you just look at the cash flow over the purchase price. So, if it's something that's just staying the same and it's a 10-year term deal, that's a 6% annual yield after you've taken that purchase price. And that is certainly acceptable to some investors.
Right. So basically, what it comes down to is that these are basically considered income investments. You're putting your money into something that's going to generate income back to you in a way that you'll get more income back compared to other places you might put that money. Savings account, you're not going to get anything like that. Bonds, you're not going to get anything like that. Maybe you get more in terms of stocks, but stocks are far more, volatile, and you got a lot of other, concerns there. And this is meant to be an uncorrelated alternative to those standard investments. You've already got money in all those other places. This is a new area that has a different type of risk profile, and this and that and the other thing. So but the idea basically is that whenever someone says, oh, I need, it's gonna take me 10 years to get my money back, Yes, if that's how you're looking at investing, but it's also, you got to remember you're receiving income at a far greater yield rate than you are from other types of investment, and what you do with
Well,
that income could inform other types of investing as well. That's one. And the other thing, real quick thing I want to get in before I forget, is that you could always sell the asset. You don't have to wait till your money to come back before you sell it again. And then you could realize whatever, even if you own it for 5 years, sold it at exactly what you bought it for, or even slightly less, you still got that money back, plus everything you've earned by owning it over the course of the 5 years. These are all factors that put into play as you're considering your investment, correct?
yeah, and I would say, I mean, if you compare that to a 10-year bond, right? For a bond, you're definitely not getting your investment back. For it takes quite a while, 8+ years. I mean, even more depending on the bond that you are actually purchasing, to get that. You do get that principal back at the end of the term, but you're not going to get it back in the first year, right? I mean, especially at the yield level that the bonds are currently at.
All right, great.
So.
So anyway, good. That was a great question. I always love answering questions like that. Next one is this investment for lifetime publishing royalty collection? Maybe. I mean, there's different types of there's different types of royalties being sold. In some cases, you are buying the publisher share, and in many, in fact, if not most cases, you're buying the public performance, the songwriter share of public performance royalties, which is sort of, I guess, for lack of a better term, a subsection of publishing royalties. It's a little bit different. In some cases, you're buying sound recording royalties. In some cases, as we mentioned earlier, if it's not music, you're buying trademark or film residual royalties. So it depends on the royalty that's being offered, basically, is what you're looking for. And is it for lifetime? Sometimes it's for the life of the copyright, which is what we term as a life of rights term asset. Other times, it's only for a 10-year term, which we list as basically 10-year term, or sometimes it's 20 or even 30-year term. So it's a variety of different terms for a variety of different types of royalties available. So you have to look at each individual asset to determine what it is that the royalty is and what the term of the purchase is. All right, moving on. Please describe the royalty exchange verification process. Great question. So as you know, anyone can create an account to be an investor member of Royalty Exchange. It allows you to get all the alerts and so on. Allows you to see the listings and the details and everything else. But in order to bid, we do have to verify you. You do not need to be an accredited investor in order to be verified. That is not how it works. We basically just need to explain to you the rules of the platform, that you understand that when you place a bid, it's an actual bid, not just like a, hey, let's see what happens type of bid. But like if you win with that bid, you're on the hook to pay what you bid, and that you actually have the funds to cover it. You can do so within 2 days, and just basically cover all the rules of what's going to happen should you win your bid before you actually place a bid for the first time. So there's no confusion once the auction or whatever it is that you're bidding on is done. You're like, oh wait, I need to pay in 2 days. Where's my wallet? That kind of thing. Like we need to make sure you understand exactly what all your responsibilities are before you actually start actively bidding on the platform. The process is simply, there's a form online where you just fill a little bit of basic information about yourself. And then we do need to conduct a very short phone call. It's typically 5 minutes, maybe 10, 10 if you have a lot of questions, 5 minutes if it's just straightforward. And where we just sort of ask you to verify a couple of things that we need to ask you, which are something we need to have on record in case there's any problems afterwards. It's sort of a legal requirement, basically. So that's the verification process. If anyone have questions about that, type them in, I'll get to them, but that's essentially what it is. All right, this might be my favorite question on the list, and I think there's one almost exactly like it in the chat, so I think the person's actually on here. So let's jump into this one. Typical public performance royalty revenue breakdown between restaurants and bars, clubs and businesses versus Pandora or radio and Spotify and whatnot. He wants to know kind of how those are broken down. Many of the auctions that we have right now are focused on public performance royalties, which is true. And the question is, right now that's concerning given the hardships that businesses are going through right now, and so on. And I'm just going to switch to the chat question, which I believe is probably the same person, because this is almost the same question, but this is written down a little more clearly. It says the breakdown of income source within public rights is, he says it's opaque and non-existent, and I'll be able to explain why that's not true. I'm hesitant to buy any of these assets due to COVID-19 impact on the restaurant, bar, hospitality industry, as most recent income for the second quarter and third quarter is not available. That is true. It would be very helpful to figure out how much of the income is coming from radio versus Pandora versus Spotify and this public performance versus the hospitality and the venues and whatnot. Without that data, it's unbiddable. So this is a fantastic question. So let me kind of scope out the context here a little bit, right? So public performance royalties is what a songwriter earns when their music is played in what's considered a public forum. Okay, now that is broken down in many, many different ways. Okay, so one can be if their music is streamed in a restaurant or in a bar, or if it's performed live on stage, or if it's performed on the radio, or if it's played over Spotify or Apple Music. All these things earn a public performance royalty. Okay, now we do list, so I'm trying to figure out the order which to answer these questions. In all the listings and all the auctions, you will see a breakdown of how the sources of where those royalties come from in the auction or in the financials tab. Okay, it'll break down. In fact, I could even try to show you here in a little bit, but let me just kind of walk through it here before I start trying to talk and type. Basically, you'll see all of it historically. This is the breakdown in the last 12 months. This is the breakdown over the history of the catalog that we've had, and you can see exactly how it's been generating royalties from all of these different sources. All right, so that's one. More specifically, though, we don't know what that is until the distribution has been made, and so there's a gap between when the music is aired, right, when it's actually listened to, versus when it's actually paid. Okay, usually about, I'm going to say 6 months. Rob, is it longer than that? It's about 6 months, because the PROs collect all these royalties. They kind of do their analysis and their breakdown, and they distribute all the funds. So what you're looking at right now is based on the most recent distribution that we have, which is going to be at least 6 months old. So that's a concern for some, which we totally understand, right? And if that's going to keep you from bidding until you get a better sense of 6 months from now how this worked out, then that's totally understandable. And we do know that PROs are warning their members that royalties might be lower than they have been before, based on the fact that certain of these formats are not playing as much music, and therefore they will be collecting less as a result. But that's the part I want to get into here. We have done an analysis of all of the assets that we've sold or even analyzed that's come through our system that looks at, okay, for public performance royalties, how have these earned over time, basically. And what we found is that for the assets that we've had a chance that's coming through our system, public performance royalties earned from live music or from venues, which is restaurants, bars, etc., typically contribute 1% or less of the overall royalties that asset has earned. By far, these assets are earning most of their public performance royalties from streaming or from radio. Okay, so that's the first thing. That's just within our universe of royalty exchange. When you look at the PROs will report, okay, maybe 16% of their overall distributions come from live and whatnot. But you got to understand, they're also distributing royalties to music that was just released this year. And for the most part, that's not the kind of royalties that we deal with at Royalty Exchange. We're typically posting assets, catalogs, royalties that are 3, 4, 5, 6 years old, and so on. So it's a different mix. We're working with a very specific subset of music than of all music, which is what the PROs are reporting. Okay, so that's one thing to think about. The second thing, it's a little bit more complicated, and that's basically the way that PROs collect and distribute public performance royalties from these different sources. Okay, so in the venue hospitality industry, as the question is, the way that works is that all these bars, restaurants, they basically sign a license with the PRO, ASCAP, BMI, whoever. They sign a license and they pay a certain amount for that license. Okay, the PROs collect all that money. All right, and then they distribute it to their members, not based on exactly what was played in each of those venues, because they have no idea what was actually played in each of those venues, right? They distribute that income based on market share, right? And that market share data is based on a number of different factors, like what's being streamed on Spotify, what's played on the radio, the charts, et cetera, et cetera. So it's not a one-to-one exact breakdown of you got played in this bar, and so you're going to get this X% of that bar's royalty license. That's not how it works. It's based on market share. It's a much different formula. Okay, but on things like streaming, it's a little bit more straightforward. Okay, you're going to get paid more precisely for what you were streamed. Okay, that's a different thing. So that's why it's a little bit different in how all that works. So this is a long, complicated question, but basically you can see the source of royalties. We can say that live music and venue-based income is a small percentage of the income that is earned from public performance royalties as comes through Royalty Exchange. It's very, very small. We're actually in the process of updating exactly this data for this month, which we will distribute more publicly more detail for all access members, a little bit more general for the general public, but we are looking at sources of royalty income over time by dollar age. So you can see, okay, generally on average, songs that are 8 years old today are earning from this breakdown. We'll be able to track from the year 1 through year, say 8. Here's how those formats have changed from year to year over the year on average, that sort of thing. So that'll give you a little better sense of how you might be able to evaluate some of these things. But in general, yes, I mean, if you're concerned about the current state of, radio paying less in advertising right now, radio advertising is very, very low at the moment. If you're worried about the live performance, if you're worried about, hospitality-based in-store streaming, I can see how that might hold some people back from bidding at the moment, and that's entirely understandable. But I will say that that's why source of royalties is so important to evaluate when you're looking at an asset on the platform. That was a very long answer coming from me. I'm going to shut up now. Ryan, you have anything you want to add to that, or Rob?
Yeah. So like you said, I would, again, the data's on there. We provide the source data. I would look at that. I mean, I would honestly say this is the perfect environment to be a kind of a chooser of these assets, right? To look for them and be selective about which ones you're bidding on, which ones you're considering buying. And, when you get out on that dollar age spectrum, I would argue that, there's a chance that people are actually listening to songs more, right? Something that's over 8 years old, right? It's found its niche market. People are at home more. They're probably listening to it more now than they were before. And just to kind of clear that up, right? Every time you play a stream on Spotify, and Rob, correct me if I'm wrong, but every time you listen to something on Spotify, Pandora, it does produce that performance royalty, right? So you are getting paid for that, whether it's in your home or whether you're out somewhere.
Yep. Internet streaming, no matter where it's streamed, counts as a public performance. And can I just clarify, maybe just for my own understanding, is when we list on a public performance, so like a BMI or ASCAP auction, we break down the actual sources. We have streaming, we have radio, we have TV, film, and then there's an other. And then now is, for our purposes, is other where you would see like live or bars, restaurants. So just for the person who asked the question, maybe it didn't look like it, but it was probably lumped in with the other since it was one of the smaller sources. Is that right?
If I believe if live or venue based type of royalties were a significant individual source by itself, it would be separate. But I don't believe it's ever been.
So live has is its own source category. We have never had venue based be big enough or be distinguishable enough within the other category that it's something that we've ever taken into account.
Right. The top three sources, the top three most common sources in terms of just volume as well as dollar amount is streaming, radio, and TV film. Hands down, like not even close. And so that's what you'll see, more commonly. And again, like I said, we're literally researching this with more precise data that's going to be come out in a couple of weeks. So keep an eye on that one. But anyway, great question. Thank you for asking it. It really is helpful. Next question then. What are the pros and cons of this type of investment, and why is now a good time to invest, and who is this type of investment for? Ryan, I'm going to let you run with this one.
Yeah, so I'd say first off, and most is just going to be that diversification, right? It's uncorrelated from everything else that you see out there. So I definitely count that as a pro. Another pro is the cash flow profile of it, right? You're receiving cash flows, every quarter, every 6 months, that sort of thing. And it's a little bit different in that sense than, say, a traditional fixed income investment, right? You're actually receiving, air quotes, like interest plus principal on every single payment, if you want to look at it that way. As well. And it just gives you that kind of that different source of income than you would see elsewhere. I also, from what we've seen on the platform too, the returns have been higher as well. Again, that's just a nature of the asset that we're looking at here. Cons, I don't really want to call them cons, but how they're different than everything else is, you know, it's a little bit more illiquid, right? You can't look at the market today and be like, hey, you know, this is trading at X price. We have made it more liquid with our secondary market, where you can receive offers, you know, instantly, as long as it's listed up there on the secondary market, at least for our public performance ones. And just trying to think if there's anything else that I can really think of. You know, it does take they are larger assets, right? So it takes a little bit more buying power to kind of tend to dip your toe in, but we have actually started to see some lower price assets as well come into our universe. So I'd kind of say that's the bit of the difference here.
Great.
Yeah.
Thank you. Perfect. All right, I'm gonna just got two other real quick simple questions, and we'll get into the Q&A stuff. What similarities are there between trading these commodities and trading in the stock market? Well, first of all, you're not trading in anything, right? This is a marketplace where you're conducting one-to-one, transactions, basically, right? You are buying something with a single buyer, single seller. These are not securitized. You're not trading them like a commodity or like a stock. None of the SEC regulations in that sense apply. This is straightforward buying an asset from another. That's the best way I can put it. I think the other one is that, I mean, you know, this isn't exactly how it's always done on commodities or stock markets either, but this is not like buy low, sell high type of investing. Generally, it's a buy and hold investment. It's an income investment. It's you're not betting that the stock is going to increase over time necessarily. So that's another I think difference. Brian, I don't know if anything else you want to.
Yeah, I just touched on the other thing. We don't want to look at it like it's not commoditized, right? Every single asset that's listed in 90% of the case is different, right? There's difference. So even if we list a asset from a same seller twice, there's a good chance he's added works to his catalog since the last listing, right? So every asset listed is going to be a little different, right? It's not like a share of Apple stock where every share is the same. Or like, you know, Apple and a competitor could be pretty interchangeable. This is going to be completely different in that situation.
Yeah. Although we do have we've tried to add some standardized metrics and data to make it a little bit easier to compare between the two. Dollar age, for instance, trend rates, things like that. We've tried to create some more quantitative metrics that'll make that a little bit easier. And I think we've done so pretty successfully. So, all right. I'm going to switch over to the stuff that's been coming in over the course of the call. Okay, actually, one thing I've noticed is actually first, one of you have raised your hand. I believe I'm just going to use your first name, Brad. You have your hand raised. I know you asked the question about the source of public performance royalties questions. By raising your hand, really the only way for me to call on you is to either allow you to talk live during the session here right now, which usually everyone lowers their hands immediately when I say that. So if you have a question, there it goes. But if you have a follow-up question, please add it to the Q&A document, and we'll get to it, because if you have more questions related to that topic, I'd love to get into it more, because it's a fascinating question, a fascinating topic. In the meantime, first question here is, why are there so many declined, expired, or canceled bids in the secondary market? Does that mean that those current owners aren't serious about selling? In some cases, yes. There are many assets on the secondary market that are owned by other investors who may have no intention to sell it. It's there and it's free to receive offers, and they might like to see, hey, they're just curious to see what people might offer them for it. And if it's high enough, maybe they'll become a more serious seller after all, but they're not like an active seller, right? So that's one. There are many active sellers who will be more than happy to sell their assets for a serious bid, but that's the other hand. A sale requires two things: a serious seller, but also a serious buyer. And some of the bids that you'll see that are declined or that are expired, if you look at it closely, are not serious bids. They're incredibly low. They're not even equal to the last 12 months earnings of the asset. So if you're making those types of bids, you're going to be ignored. And that's why you're going to see a lot of those types of ignored bids on the platform. So that's how I'd answer that question. If there's any other responses here from the panel, I'm open to hearing. But all right, does Royalty Exchange collect royalties, or do you use a third party to collect the royalties for the company? And if so, what company do you use? So no, we don't really collect them. We administer the payments, but generally what you'll see is that for every asset listed on the platform, there is a distributor listed as the entity who pays those royalties. This is the distributor who pays the royalties historically to the person who's selling those royalties, right? Typically, for the sake of argument, let's say it's one of the PROs, ASCAP or BMI. In some cases, it might be the label, Warner Music Group, whatever, right? Once that sale is done, that same distributor then just redirects those payments to the new owner, right? You just put in a letter of direction and it just shifts the royalty payment from one account to another account. We manage the administration of that process, but we don't actually collect the royalties, like hold them here and then send them to you. We just sort of redistribute the funds. Rob, I don't know, if you have anything you want to add to that, or is that a good way of describing it?
Yeah, no, it's really just a pass through. It's a couple of reasons for that. One is just to have insight into how the royalties are performing. If there's any issues, we can help jump in, and also to allow you to post those on the secondary market, so that we can continue to update the earnings as they come out. So those are kind of the two big reasons.
What are the most common reasons artists sell their royalties for any period of time? All over the map. I mean, some are interested in just raising money. Like, royalties, they collect them regularly. And for investors that $5,000 a quarter or something like that might be, a good income investment for you. But for a songwriter who maybe that's the only major source of income, that they might need to do something more meaningful than just $5,000 a month can accomplish, right? Or it would take too long for them to save up over 3 years to save up the money they need to accomplish what they want to accomplish. So they raise the money now because money now is more valuable than money tomorrow, as we all know. And so it's a way of taking advantage of the present value of money to raise a lump sum for a specific reason. Maybe they're building a home recording studio. Maybe they don't want to take an advance from a label and want to record their next album without debt. Maybe they want to pay off their house. Maybe they're in debt. There's lots of reasons why they want to do it. They're all over the map, but generally they come because they have some kind of a plan. In fact, one really interesting reason is some are songwriters. This is a great one. Some are songwriters who've been writing music for other artists their whole career, and now they want to put their name out there as, they want to put music out under their own name. And so what they'll do is they'll sell that catalog of music that they wrote for others in order to create like a creative break in their head, right? Like they raise the money and they use that to finance their own their recording career, but they also need that creative break from what they've written in the past. That's really interesting. I had never thought of that until I spoken with several songwriters who that was their rationale. They needed to just create a separation from that part of their career to this new part of their career. It's fascinating stuff. So yeah, there's just a lot of different questions. So next question is how I don't know, I'm trying to read this one. How goes into artist determining? How does an artist determine to offer royalties for a limited term or lifetime? Well, I guess that depends on, again, the artist's motivation. Some artists, they want to see what they can get for it now. So like royalties earn over time. Generally, royalties will start to decline over a long enough time frame. Okay, so if by selling for just a 10-year time frame, they might be able to get a good bit of value for the royalties that will be earned in those 10 years, but they want to get it back after 10 years on the off chance that maybe that's one of those royalties that just, earns forever and they don't lose out on that retirement income or something like that. I mean, that might be one way of why they do it. Some just don't like the idea of selling away permanently something that they wrote. It's like a personal connection. They wrote a song. This is not just like a car. You know what I mean? Like this is something that they have a personal and emotional attachment to. So the idea of breaking with it for the lifetime of the copyright might be too much for them, but for just 10 years, that's something that's a little bit more easy for them to kind of evaluate. Those would be some of the reasons that I would think of. I don't know if anyone else has anything to add there.
That's
no?
Great, man.
All right, doing what I can. Because most investors may not be familiar with writer versus publisher royalties, how would an investor collect publishing royalties if they are unfamiliar with the royalty differences and collection process? Okay, so I won't get into the difference between writer versus publisher royalties right now. It's a long answer, and there are guides on our site where you can kind of read the difference between those things. But basically, if that's important to you, if knowing if you're buying the writer share versus the publisher share, I'm not sure why that would be a determining factor in whether or not you're bidding, because the financial information is all there. The returns, calculations are still available. It's just a different source of income. I think what the question is that if they don't know how to collect those royalties and if that's actually the question, I'll refer back to what we said earlier, is that you don't need to worry about that. We're working with the distributor of those royalties to redistribute what they're already paying to the new owner, which in this case would be you. And then we're handling the administration of that process to ensure that it actually happens. So as an investor, whether you're buying a writer share or a publisher share, the need to collect, the concern about the need to collect one versus the other is not a concern that you need to have, because we're taking care of that. That's part of the service that we're offering. We're taking care of that for you. Does that make sense, guys?
Sure does.
All right. Guess this is the Anthony Bruno Q&A show today. All right. So are music publishers allowed to bid on these royalties? And if so, what stops larger firms or labels from repurchasing rights from songwriters and composers? Nothing. This is an open market. Anybody can bid on these things. And so, yes, we have seen publishers, and yes, we have seen labels bid on these things. We can't say who, and we keep everyone, anonymous as they prefer. But that absolutely happens. There's nothing that keeps them from doing so. There's no reason to. It's what an open market does.
And it's a good sign that the folks that are directly benefiting from it themselves are also interested in rebuying more interest in those rights.
Exactly. It's a great point. It's a very, very good point. And it's also better for the one selling. I mean, the more people that are interested in those catalogs that they're selling, the better result they can get. So it helps on all sides. Do you have a platform that will assist a person that needs financial assistance to purchase a catalog? No. Can you talk about lifetime, right? Life of copyright plus 70, or life of the author plus 70 years. So lifetime of copyright ownership of income. I'm sorry, I'm going to try this again. Can you talk about lifetime ownership of income / earnings versus ownership of the underlying work / copyright? So not owning the copyright, but owning the royalties for the life of the copyright.
Yeah, I can jump in.
Sure.
And hey, Charlie, I just want to let you know that Ryan is the only one wearing a collared shirt today. So he called us out for that this morning. So I figured you like that. Yeah. So the difference, I mean, when you're buying a lifetime of copyright income interest, Ryan looks good. You still do not have any licensing authority. You're going to be a passive collector of that income. Oftentimes, there's almost always going to be an underlying publisher who still owns the copyright, who is still tasked with going out to monetize the catalog and pay the income. The big key difference is that, if you just have the income interest, you don't have any authority to go out and license those works yourself.
All right. Hope that answers the question. Okay, there is a follow-up of going back to our source of royalties question on the public performance side. I'm just going to read through this question and kind of get to the nut of it here. So in terms of internet streaming public performance royalties, is this only for subscribers who listen on the free ad-supported model, or does this also include paying subscribers who play the song via the cloud instead of download to the devices? It's just a confusion between internet streaming versus mechanical and sync. Okay, so I'm going to answer this briefly, but I'm also going to point you to an asset, some resources on our website where we dive into far greater detail. So I'll start with that. If you want to go to the World Exchange website on the blog, you will see a section of the blog called Investor Resources. And in there, you will see a section of investor guides that many of those guides get into the different types of royalty assets there are, mechanical versus public performance, et cetera, et cetera. I would suggest taking a look at those. There's also a video available that's sort of a investing 101 that kind of breaks down not only the different components of the marketplace, but also there's a section in that video that goes in a little greater detail on the different types of royalties that there are and how they function. Okay, I'd be happy to talk about it now, but we're running low on time and it is a rather involved.
If I can just jump in real quick. Yeah, so it doesn't matter if it's streamed from a legitimate site. It doesn't matter if it's free, ad-supported, paying. There is a public performance royalty generated, yes, and you would receive that.
Right.
Okay.
So yeah. So basically, if you're streaming on Spotify, that stream is generating a public performance royalty. Whether you're a free user that is getting ads or whether you're a subscriber, it's still a public performance royalty. Those royalties, I'm not 100% sure. Those royalties might be a little bit different in terms of like how much is actually paid. I know it's definitely true for mechanical. I'm not sure if it's true for public performance, and yes, streaming services are seeing a reduction in their ad revenue, right? And that would affect those royalties to a certain extent. But the vast majority of what we're seeing in terms of what's generating the income still comes from the subscription streaming. I mean, the subscription streaming data is the most important thing to be looking at, I think, right now. Like, you want to see, are these services increasing their paid customer base? That's the stat to look for. It's not how many, are they listening more? Are they listening less? The per stream payment, none of that stuff matters, to be completely honest with you. It's really about how big is the overall pie, and that pie is filled with paid subscribers, and that's what you want to look at as the main source of data, in my opinion.
Then I would just say, to answer that last part of your question. So, like we said, so to recap, it doesn't matter where the stream comes from. There is a public performance. A mechanical royalty is generated from a stream that you are the chooser of the song to listen to, right? So if you're listening to Pandora radio, and Rob, again, jump in if I'm kind of saying anything wrong here, but so if you're the actual person choosing the song, you're going to get a mechanical and a performance. If you are not choosing the song, so if you're listening to like Pandora radio, there's only a performance royalty generated.
Right.
So that would be your ad supported, right, where you actually don't have the choice of the song you're listening to. So that's the difference between mechanical, when a mechanical is paid and isn't. The sync's a little bit more complicated. In general, sync's just going to be when you get synced with a TV show. It's going to be a one-time payment. You do have YouTube and Facebook are a lot of cases considered iSync, which is still considered a sync royalty. But it's whenever you listen to it on a YouTube video or a Facebook type platform.
Right. So yeah. So and one other thing about mechanical royalties is that mechanical royalty is collected by the publisher and then is paid to the songwriter based on the publishing contract between them, while the public performance royalty is paid directly to the songwriter through their PRO. Again, it's a little complicated. Welcome to the music industry. We try to make it very simple, though. Okay. I'm happy to answer more of those questions if necessary. Can you explain the transfer of investment if we buy life of rights royalties and say something happens to the investor we want to leave to our children? I believe that's transferable, correct?
Yeah. Yep. The purchase agreement is the successors and assigns of the purchaser. The rights flow to the successors and assigns. So you can leave it, you can assign it, you can put it in a trust, however you plan to handle your estate.
Great. All right. Last couple questions here. Do the listings have a buyback option for the seller? And if so, how does a buyer know and how to find out the terms? Sometimes, I would actually say rarely, there is a buyback term. If there is, it's something that we list quite clearly in the listing itself. It's pretty obvious, I think. Generally, those buyback terms are, I would call it generous, like 150% of the closing price or something like that.
Right, and it's always time limited, so it's either during the first year or the first 2 years. But the seller would actually have to do that, so it's not an open-ended kind of thing where you're always kind of wondering if they're going to exercise. But it's always either 130% or 150% of what you buy it for, either 1 or 2 years.
And correct me if I'm wrong, but I haven't seen. I mean, I edit all the listings. I haven't seen one in a while.
Oh, it's super rare. I would say probably less than 1% of the deals that we do, but they're out there.
Okay.
But again, it is conspicuous in the listing if it's there.
Sure. All right. Last question in the Q&A right now. I'm an average investor and I've built around 10K in capital to invest, but I've not seen anything on the secondary market within that price range. Am I late to the party or do I need to build more capital? Yeah, I mean, 10K would be on our lower end without a doubt.
Yeah. I would look in the secondary market. You're going to find some more options available. I'd also, I'm not sure about your specific situation. I'd be careful, right? This, like we talked earlier, this is a little bit more illiquid. So if it's like money that you might need for a house or something that you might need, say within a year, 2 years, probably not the best asset class to to go about purchasing. But if it's more of a savings, yeah, our secondary market will be the best option for that. There are some auctions that do go up for lower amounts, say 5,000. Those tend to get a little bit more hype just due to that price range. So you'll just want to kind of set some boundaries on what you're willing to pay. Don't go over, anything. Don't get kind of sucked into the bidding hype, so to speak.
And I'll just jump in here because I don't think I've mentioned it yet today, but Royalty Exchange and Ryan are not investment advisors. So do not listen to him on any investment decisions. You got to make that individually. But in general, yes, I think you're probably going to find more assets under 10 grand in the secondary market.
Exactly. And what's interesting is that, just to kind of loop back to what we started with the direct listing capabilities that we're extending to sellers, that may be something that comes up a little bit more often. I can't say for sure. Obviously, we haven't even really announced it publicly yet because there's still a few things that we need to do on the development end before we make it more broadly known to artists that this is something available to them. But once we kind of tighten everything up the way we'd like it to, I could see a scenario where a seller who just wants to make a very, very small percentage of their catalog available could do so in more. I don't want to call it microtransactions necessarily. It's the first word that comes to mind, though. But like in smaller amounts, almost like an ATM, a catalog ATM, where they could just quickly do it. An auction, everything else might not be worth. They know how much they want to be able to raise. They throw it up there. They set their price. Someone matches it. Boom, we're done. It's a far lower touch scenario. It might happen. I mean, I would say keep an eye. But basically, the question is to keep an eye on it. And we do. And also, if you haven't already, we do have filters in the secondary market that allows you to filter the list by your price range. So that way it'll be far easier for you to notice when new ones are added if you keep those filters disciplined in terms of what your price range is. That'll be a lot easier for you to find things. So that's all we had. I get the one last comment came in through the chat feature that says, Ryan, looking good. Looking good, Ryan. Just want to let you know. All right, that's it. Thanks, everyone. I don't see any other questions, so I appreciate it. We'll do this again next month. Again, look for the replay as it comes out. Probably won't be till later today, if not tomorrow. A few other little things that are coming out. Like I said, we've got some great insights on source of royalty income that we're going to be posting the next week or so as we finalize that data. So just keep a lookout for that. Until then, enjoy the marketplace. And if you have any other questions, you could always send them to investors@royaltyexchange.com. Thanks again for joining us, folks. Have a good day.
Thanks, everybody.
Have a good day.